Time now for Options Insight. I'm Abigail Doolittle. Joining me today from the CBOE in Chicago is Scott Bauer of Prosper Trading Academy. And Scott, thank you so much for joining as always. And since the last time that we've talked, much has changed, even this morning. Talk to me about the Fed.
Yeah, much has changed, but we're kind of in the same spot here. You know, what was all but a certainty of 3 rate cuts for the year and possibly even a 50 basis point cut. Obviously, that whole scenario changed last week with that jobs report, and then you get Chairman Powell coming out this morning, obviously looking very dovish. So it's pretty much well set right now, unless we continue to see some really, really strong numbers coming out with CPI, PPI, that we're going to get a 1/4 point cut coming in the next couple weeks. However, if we were to get a 50 basis point cut, Abigail, I'm on the other side of things here. I think this market absolutely sells off, probably in the likelihood of 3 to 5%, which would be a great buying opportunity. But right now, the market, our economy, we're not on a defibrillator right now. It's not like, you know, things are that bad. I don't think it's necessary that we have to be aggressive with rate cutting.
You know, when we bring the yield picture into the equation, the 10-year yield has really bounced off of that sub 2% level. It seems to be heading higher. Treasury note futures also seem to be heading down. Do you think that whatever action is taking place by the Fed in July, do you think that it's priced in, that we might continue to see rates back up? And what does that mean for stocks, if so?
I do think it's priced in, and I think the 1/4 point cut will actually be good for the market because that's what everyone's expecting. That's the Goldilocks scenario that people are expecting. No cut, we probably sell off a little bit, but the likelihood of that is next to zero at this point. 50-point cut, I do believe major sell-off, like I just said.
Okay, do you think that yield would still go higher, just be a little bit of wobbliness for stocks there?
Yeah, I do think rates are going to go higher. That 192 that we saw a couple weeks ago, that was a big overreaction in the marketplace. I do think we get rates higher, which is why I like the banks and why I like JP Morgan in specific ahead of earnings next week.
Yeah, I just wanted to talk about that because interestingly, even with yields falling so much in the year, the banking sector up more than 15% on the year. But if yields do climb, you're positive on the banks. Talk to us about why and your trade on JP Morgan.
Sure. Well, JP Morgan is certainly the leader in the space. All the banks, all the big banks have really held their ground during this massive rate sell-off from 3% down to 2%. Trading revenues, I would expect JP and some of the other guys to be really, really good because we've had added extra volatility in the marketplace. That's why I like JP. I'm buying next week's 114, 117 call spread going into earnings, 75 cents or so. Great reward to risk. I love the upside for JP.
Scott Bauer, great market conversation. Love your bullish trade on JP Morgan. Thank you for joining us for Options Insight at Romaine and Scarlett. Back to you.